Hi everyone, welcome back to the Investing Iguana, where we talk about all things related to investing in Singapore and beyond. I'm your host, Iggy, and today we're going to look at 4 Singapore stocks that reported rising profits in the second quarter of 2023. These are companies that have shown strong resilience and growth despite the challenging economic environment caused by the COVID-19 pandemic. If you're looking for some ideas on where to invest your money, you might want to check out these 4 stocks and see if they fit your portfolio and risk appetite. But before we get into that, please remember to like this video, subscribe to our channel, and hit the bell icon to get notified of our latest uploads. And as always, this is not financial advice, so please do your own research and due diligence before making any investment decisions. 1. Sheng Siong Group Ltd. Sheng Siong Group Ltd, SGX, OV8, is one of the largest supermarket chains in Singapore, with 64 outlets across the island. The group also operates supermarkets in China under a joint venture. In the first half of 2023, 1H 2023, Sheng Siong's revenue increased by 9.5% year-on-year to 723.4 million Singapore dollars, driven by higher same-store sales and new store openings. Net profit rose by 11.7% year-on-year to 82.6 million Singapore dollars, while earnings per share increased by 11.6% year-on-year to 0.048 Singapore dollars. Sheng Siong also declared an interim dividend of 0.035 Singapore dollars per share, up from 0.031 Singapore dollars per share a year ago. This translates to a dividend yield of about 3% based on the current share price of 1 Singapore dollar and 17 cents. The increase in revenue and profit was due to the strong demand for groceries and essentials amid the pandemic. Sheng Siong also managed to improve its gross margin from 27% in 1H 2022 to 27.5% in 1H 2023, thanks to better sales mix and lower input costs. Sheng Siong has a strong balance sheet with 184 million Singapore dollars of cash and no debt as of June 30, 2023. This gives the group ample financial flexibility to pursue growth opportunities. The group plans to open 6 new stores in Singapore by the end of 2023, adding about 40,000 square feet of retail space. It also aims to expand its presence in China, where it currently operates 4 stores in Kunming. Sheng Siong is a defensive and resilient business that has consistently generated steady cash flows and dividends for its shareholders over the past decade. The group has a loyal customer base and a strong brand name in Singapore's grocery market. In 2022, Sheng Siong's revenue grew by 6.4% to 5.8 billion Singapore dollars, while its net profit grew by 10.4% to 373.4 million Singapore dollars. The group also declared an interim dividend of 0.033 Singapore dollars per share, an increase of 5.3% from the previous year. Sheng Siong faces some challenges, such as rising competition from online platforms and e-commerce players. However, the group has been investing in its digital capabilities and enhancing its online offerings to cater to the changing needs of its customers. Overall, Sheng Siong is a well-managed business with a strong track record. The group is well-positioned to continue generating steady cash flows and dividends for its shareholders in the years to come. 2. Nanofilm Technologies International Ltd. Nanofilm Technologies International Ltd, SGX, MZH, is a provider of nanotechnology and technology-based solutions across a wide range of industries. In the first half of 2023, 1H 2023, the company reported a 15.2% year-on-year increase in revenue to 111.3 million Singapore dollars. This was driven by broad-based year-on-year revenue increases across all 3 of Nanofilm's divisions: advanced materials, nanofabrication, and industrial equipment. Net profit increased by 5.1% year-on-year to 18.8 million Singapore dollars, while adjusted net profit, excluding COVID-19 expenses, climbed nearly 18% year-on-year. Nanofilm also hiked its interim dividend by 10% year-on-year to 0.0113 Singapore dollars, which implies a dividend yield of about 0.8% based on the current share price of 1 Singapore dollar and 38 cents. Nanofilm is a Singapore-based nanotechnology company that has been growing its business by developing innovative solutions for customers in various sectors, including consumer electronics, automotive, biomedical, and renewable energy. The company has a diversified customer base with over 300 customers worldwide, including some leading global brands such as Apple, Huawei, Samsung, and Tesla. Nanofilm has a strong research and development (R&D) winking and laughing team with over 200 engineers and scientists. The company has filed over 300 patents to date and is constantly looking for new ways to apply its technology to solve real-world problems. Nanofilm is ambitious and has plans to grow its business in the coming years. The company is exploring a potential joint venture in advanced battery components for electric vehicles in China. It is also looking to acquire other companies to gain access to new customers and markets. Nanofilm is well positioned for growth in the nanotechnology sector, which is expected to grow at a compound annual growth rate (CAGR) of 10.5% from 2020 to 2027. The company has a competitive edge in this field with its proprietary technology and expertise, as well as its ability to customize solutions for its customers' needs. Nanofilm also has a solid financial performance and a healthy balance sheet. As of June 30, 2023, the company had 117.6 million Singapore dollars in cash and 13.8 million Singapore dollars in debt. Overall, Nanofilm is a well-managed company with a strong track record of innovation. The company is well positioned to grow in the years to come and could be a good investment for investors who are interested in the nanotechnology sector. 3. Raffles Medical Group Ltd. Raffles Medical Group, SGX, BSL, is an integrated healthcare services provider with a network of 3 tertiary hospitals and more than 100 multidisciplinary clinics in Singapore. It also operates hospitals and clinics in China, Japan, Vietnam, and Cambodia. In the first half of 2023, 1H 2023, RMG's revenue increased by 11.2% year-on-year to 382.3 million Singapore dollars. This was driven by an increase in both local and foreign patient traffic as air travel resumed and restrictions were eased. Net profit rose by 38.4% year-on-year to 32.8 million Singapore dollars, and earnings per share (EPS) increased by 38.5% year-on-year to 0.0185 Singapore dollars. RMG declared an interim dividend of 1 cent per share, up from 0.0075 Singapore dollars per share a year ago. This translates to a dividend yield of about 1.6% based on the current share price of 0.632 Singapore dollars. Raffles Medical Group, RMG, has been playing an active role in Singapore's fight against the COVID-19 pandemic. In 2023, the group provided vaccination services, testing services, isolation facilities, and treatment for COVID-19 patients. RMG also continued to expand its regional presence, opening its second hospital in Chongqing, China, in April 2023. The new hospital has a capacity of 700 beds and offers a range of medical specialties and services. RMG also opened 2 new clinics in Tokyo, Japan, in June 2023, bringing its total number of clinics in Japan to 4. The group plans to open another hospital in Shanghai, China, by the end of 2023, which will have a capacity of 400 beds and offer tertiary care services. RMG is a good investment if you are looking for a healthcare stock that can benefit from the growing demand for quality medical services in Singapore and the region. The group has a strong brand name and reputation in the healthcare industry, as well as a loyal customer base and a diversified revenue stream. RMG also has a healthy balance sheet with 267.9 million Singapore dollars in cash and 113.4 million Singapore dollars in debt as of June 30, 2023. This financial strength allows RMG to pursue its expansion plans and invest in new technologies and capabilities. RMG is a stock that could offer you steady growth and income over time. 4. The Hourglass Limited. The Hourglass Limited, SGX, AGS, is one of Asia's leading luxury watch retailers. It has more than 40 boutiques in 9 key cities across the Asia-Pacific region and carries more than 50 brands of luxury watches, including Rolex, Patek Philippe, Audemars Piguet, and Hublot. In the first quarter of fiscal year 2023, 1Q FY 2023, the Hourglass reported a 49% year-on-year increase in revenue to SGD 218 million. This was driven by strong demand for luxury watches across all markets. Net profit surged by 153% year-on-year to SGD 29.8 million, while earnings per share increased by 152% year-on-year to SGD 0.042. The Hourglass declared an interim dividend of SGD 0.02 per share, up from SGD 0.01 per share a year ago. This implies a dividend yield of about 1% based on the current share price of SGD 2.02. The Hourglass has been recovering from the COVID-19 pandemic, which hit the luxury watch market hard in 2020. The group has seen sales and profitability rebound as consumer confidence and spending power have improved, especially in China and Hong Kong. The Hourglass has a loyal and affluent customer base who are willing to pay a premium for rare and exclusive timepieces. The group has a strong relationship with its brand partners and is able to secure limited edition and high-demand models that are sought after by collectors and enthusiasts. The Hourglass also has a digital strategy that includes e-commerce, social media, and online content to engage with its customers and reach new audiences. The luxury sector is expected to grow at a CAGR of 3.5% from 2021 to 2025, reaching $388 billion by 2025. The Hourglass has a competitive edge in this sector with its extensive network of boutiques, its portfolio of prestigious brands, and its reputation for quality and service. The Hourglass also has a solid financial performance and a healthy balance sheet with 237.4 million Singapore dollars of cash and 11.9 million Singapore dollars of debt as of June 30, 2023. The Hourglass is a stock that could offer both growth and income potential in the long run. Well, folks, that's a wrap. If this video tickled your finance bone and left you richer in knowledge, go on and hit that like button with the same vigor you'd use to grab a discounted item off a store shelf. It's the secret handshake that tells us you enjoyed the journey. And hey, it's a free way to vote for more finance-savvy content. While you're here, why not subscribe and become a member of the Iguana Club? We promise, no initiation rituals or secret handshakes, just solid financial wisdom delivered straight to your screen. It's like having a money mentor in your pocket. Oh, and believe me, we're just getting warmed up. We've got a goldmine of finance wizardry coming your way. Ever wondered about the nitty-gritty of investment strategies? Or perhaps how to tame the beast called the stock market? Well, consider us your financial GPS. You are part of the Investing Iguana family now. And every like, share, and subscribe is like a high five that keeps us going. It's like caffeine for our creativity, and we sure do love our coffee. So, thanks for sticking around. Remember, the road to wealth is paved with informed decisions. Stay curious, keep learning, and let's grow together. See you in the next video for another exciting episode of Finance Fun. Adios amigos.